morning, good evening, good afternoon, whatever it is. It is 8:30 a.m. Monday, Memorial Day, May 29th, and I have some background noise running. I got Tick Strike running in the back, so excuse me, might make a little bit of noise. Earlier I saw here, that's it. House Rules noticed a 3 p.m. debt limit hearing on Tuesday. This is a tweet from Punchbowl. So that would be tomorrow, 3 o'clock in the afternoon. Uh, r- Meaningless what's going on this week, other than debt ceiling, a little bit with the jobs report on Friday, but I'll leave you at that. But again, I just want to reiterate what I was sharing in the video from yesterday about the QQQ. The S&P finished up 14 points, almost 15 points on Friday for the week. Second green week. You know what? I got to turn this off, but I'm going to show it to you in a minute. So, second green week in a row. It is up 1% almost for the month. And then you come back and you compare that over here to your Nasdaq, which is up 8% on the month. 30% on the year, but 8% on the month, 19.69 points on the QQQ from that low there on Wednesday. And that low there on Wednesday, I want to bring to your attention before we move forward. This is your 5-day view of the S&P futures, the ES. And as you can see here, after that gap up this morning or Sunday night, we're about to fill the gap after debt ceiling news is already out. This thing is a big piece of shit and it's going to get nuked. But here, again, as I've shared with many of you, I'm looking here at the NQ, okay? This is the Nasdaq futures. And this is your 4-hour. This is your 4-hour RSI, and you see how oversold it is. You don't neglect when you get that 4-hour oversold. You can go back as far as you want to go. That 4-hour oversold is always going to be your big warning sign. So anyway, while we're here keeping it together, the NQ, this is where we are as of right now. Little bit of a gap up, slowly coming down to fill this overnight. 15% from the all-time highs. Here's your April high. Here's your February high. These are from 2021, but still, for me, they're worth noting. And this is your lows from over there on Thursday last week, which come into play with your 50 retracement of the entire 2022 drop. Now, here's where it gets a little bit interesting, and I'm pretty sure that these will show up on the screen. Here is the YM. Now, this up here, 33,485, this is the 2023 open. So, again, bear in mind, the Dow is red on the year. Come over here onto your Russell and your visit here to 1790 overnight. Again, red 2023 year to date. So, a lot of things coming together that are starting to show the bigger picture about this really gullible AI bubble, which is a tiny little bubble in every aspect of what it is. We'll go on to the SPX in a minute, but I want to share here, okay? Here are your NASDAQ 100 companies. Now, I'm only going through Microsoft, Apple, NVIDIA, Amazon, Meta, fuck you, Meta, Alphabet, which is 2 because they've got their 2 tickers, and Tesla. So that is 7 stocks. Google, it's 2 different stocks, but still 7 stocks. They weigh 54.5% of the QQQ. Now we could come over here onto the S&P and we could look at those same stocks, right? And we've got 7.39 to 6.971. plus 2.955, or no, 2.95 plus 2.6, yeah, we'll call it 69, okay? Plus 2.11 plus 1.8, we'll call it 6, plus Meta 1.62, Tesla plus 1.43. Eight, same nine, same seven. 1, 2, 3, 4, 5, 6, 7. They weigh 27% of the SPX. Those seven names. So, this is why we're up where we're up. And now that we have the debt ceiling out in front of us, very likely to get nuked when it gets voted, this is the bearish view that I've got for the SPX, where because we had our move over there off of the October lows into that November spike and then the dip there, I'm counting that as a 1-2. And because we never made it up to the 3, I'm looking at it as having not been there. And this was the bearish C wave. The A, the B, and then we had a big ABC, and that became our C. Okay. Now, since then, we had that A wave down going into 3808 in March, and this appears very much like the bearish B wave, very similar to this. However, this is simply just a view that I've got going on because I'm respecting quite a bit that you've got red indexes other than the Nasdaq, and the SPX would be negative on the year had it not been for those 7 stocks. So we're already at our 41.55 retracement. We're above that 41.36 break zone. We're back to the 23.6 retracement coming from the highs to the COVID lows, having been down to the 50 retracement almost perfectly when we hit the October lows. So from a bearish view, it does very much look as if this wave 5 has completed. Now, we'll go on to the more popular circulated bullish view, which I have a couple of problems with. However, your wave 1 was your wave all the way up here into the highs that were in February. Then you had your wave 2, which was your lows there in March. Very clear. And the wave that we're in right now very much looks as if you have your 1, 2, 3, your 4, and we were finishing off our wave 5. Wider view. Not going to fit right there, but will fit right here. The wider view is still looking for a move up into the 4400s above the August highs. So bullish, not bullish, doesn't matter what it is. We still resort back to our main daddy, and that is our technical view. And as I shared with you on the weekend, the NDX, here is where we will look here on the SPY. Here's your SPX looking at a 4-hour. And as you can see, it is a very, very clear, long running, ever since back here in the end of April or the beginning of April, a very long pending running sell divergence on the 4-hour as price just continues to go higher. But again, here you are sharing you that 4-hour oversold, big screaming warning. That's what we had last week before the move. Come over onto the daily, and on your daily, as you can see here, again, very, very extreme sell divergence that has been running and running and running ever since the beginning of April on the daily, and there's nothing you can do about it because we have been in that chop zone for 8 weeks and price is now able to go higher. So out of respect for the RSI, you have to be able to look at this and see why the bulls have a very good ability to claim that we are only in the beginning and there is a lot more upside, looking strictly at the daily RSI being at 66. Come over onto the weekly. And the weekly's not giving you anything. It's giving you an indication that you have an amazing amount of room that you could continue to move to the upside simply because of where we are, having been that we've been chopping around going basically nowhere sideways for 2 months now, 8 weeks. Same view on the NDX. Same view. This is the weekly on the Dow. Okay. Same view on the Russell. So there's nothing out there to be aggressively bullish about other than the fact that you've got 7 stocks that are all doing all of the work. 7 bring in their girlfriends and, their sexy cousins. Call it, you got 10 stocks. You got AMD, you've got AVGO, and throw Netflix in there into the circle, and there you got a basket of 10, 11, 12 stocks. They weigh a little bit more on the SPX, not significantly more, and a little bit more on the QQQ. But again, QQQ is 100 stocks. We're talking about 10 that weigh close to 60% of what that index is. So coming out of absolute respect, coming over here onto the Nasdaq names, going one by one through the 8 of them. I'll go on to AMD. I'll go on to Netflix as well. So that'll be 10. Call it, Alphabet. So 9. Microsoft. All right. Start there. The Microsoft daily, very, very much from an RSI point of view only, can go much higher. Come over onto the weekly, and the weekly is telling you here, you're drunk, go home. Go to the next one, which is Apple. And Apple, as you know, has been trading sideways for quite a few weeks already. Here is your Apple after your earnings spike on a weekly point of view. And here is your Apple on a daily point of view, which this is about as disgusting as fuck as it could possibly be. How you were overbought as you went into January, and you've just had this continued weak ass RSI. But on that, you have had your move going from your gap up on your earnings and the move all the way up here to 176. So, again, a lot of frustration when it comes to these things. Number 3 is Amazon. Amazon. And again, Amazon on your daily view. Daily, plenty of space to be able to take this up much, much higher. Come on to your weekly, and your weekly is telling you you're drunk, go home. NVIDIA is now number 4 in terms of weight. NVIDIA weekly, 95. NVIDIA daily, 93. Go drunk. Go get drunk. Tesla, TSLA, number 5. Tesla daily, not much to speak of over here. Had your little move to the upside, played the dip, still trolling what is, whether you believe it or not, 60% from the all-time highs over on Tesla. But yeah, Tesla's going to change the world. Come over here onto the weekly. Lot of space over here on the weekly to make a bullish room to the upside. Elon Musk going over there to China this week? Maybe we see if something comes out. Very nice bounce, having dropped 75% from your all-time highs. Google, I like with the L. With the L, I like it. Here's your weekly, and again, on your weekly, very bullish. Still plenty of room to go to the upside. Doesn't make that much sense to go to the upside as you're already up here, over here, trolling what is the lower levels back in January, February, when you had your dips. Extremely AI overbought from a price point of view. Technical point of view, not so much. Come over here on your daily, and this is what sucks about having this troll for such a long period. You come over here and you get overbought on your daily when you had that spike up there middle of last week, and so quickly a tiny little drop, just a few points, and bam, almost halfway down oversold on your daily, right? So next on the list, and yeah, I'm getting a little old, don't remember it. Tesla, Alphabet, Meta, Amazon, Meta. Oh, fuck you. Fuck you. I'm not even going to say anything. I'm just going to type in the symbol. Daily. Weekly. AVGO very much needs to be looked at, as we had that ridiculously stupid question during the week on calls, mentioned something, threw it under the bus, and they went 7,000%. AVGO to the moon. And I believe I still have it here. Let me just go over and pull it up. Sorry for the mouse. And yes, there it is. Naveen was bidding $1 on the calls prior to the earnings. 114 from a dollar entry. Unbelievable with AVGO. Very extreme over here on AVGO. I like the idea of selling the 815 calls. Nobody wants to play that game anymore because they've all been run over on these individual names, because AI is going to change the world. And last but not least, I will leave you with AMD, since we are getting we're going a little bit too far into your barbecue and drinking time. So here, AMD, very much like NVIDIA. AMD, here is your weekly. Boom, very overbought. Come over here onto your daily, and your daily, again, same thing, up at 95, very overbought. So again, when it comes down here to the SPX, it's a question of, are we in a bullish wave one, or are we in a bearish A wave completed, B wave completing, and then our C wave, which will be determined. None of this will be known until we get to the point to where here we can get a break under 40.50. Until the break below 40.50 comes, everybody out there, everybody is guessing. And at the moment, from the way the futures look, coming back over here, here's your RTY, and more importantly, onto your ES. We might even be able to catch the actual minute it happens, but the ES is now at 8 points after having been up a little bit more than 30. Have a fantastic Memorial Day. Do everything that you can to pay it forward, make somebody smile. Other than those people that are all tranked out, fuck them. Make it happen. It's going to be a good week. It's going to be a good month. June is going to be fantastic. Have a great day. I'll see you guys in the chat room.
Different times just to kind of get a real deep color. And then kind of go in here at the bottom.